Assalamu alaikum and good afternoon, everyone. Abdullah Umar here, and on the behalf of Al Jazeera Capital, it is my pleasure to welcome you all to Jamjoom Pharma second quarter 2026 earnings call. Before we begin, I would like to mention that today's call will start with a presentation by the management team, followed by a Q&A session. So, without further delay, I am handing over the floor to Jamjoom Associate Director and Finance, Mr. Mohammed bin Khalid, to begin with the presentation. Mohammed, the floor is yours.
Thank you, Abdullah. Assalamu alaikum. Good morning and good afternoon, everyone. Welcome to Jamjoom Pharma's second quarter earnings call. I'm the head of investor relations, Mohammed bin Khalid, and I'm joined by the CEO, Dr. Tariq Husni, and the CFO, Mr. Anwar Mohiuddin. The call duration will be for 1 hour, split 20-40, with 20 minutes of presentation, followed by 40 minutes of Q&A. I will now hand over to Mr. Anwar for the financial highlights.
Thank you, Mohammed. Good afternoon, everyone. Bismillah ar-Rahman. I will be taking you through the quarter two and first half financial results as we regained momentum firmly in the second quarter, with the revenue re-accelerating to more than double from the first quarter space against a generally challenging market situation. Next slide, Mohammed. The second quarter shows two dynamics. First, a strong top-line revenue growth, 12% to Saudi Riyal 445 million, with a gross profit up 17% and gross margin expanding around 260 basis points to 66%, reflecting our shift to higher value therapeutic areas. Secondly, a deliberate step up in commercial investment. EBITDA grew 7% to Saudi Riyal 159 million, but the margins moved to 36% as we expanded our field force, increased commercial activities, and R&D spending to defend market growth. Net profit rose 4% to Saudi Riyal 138 million, with margin compressing slightly due to higher OPEX, absence of one-offs income, and lower income from JV versus quarter two 2025. The takeaway top-line momentum and gross margins are strong. The movement below is an investment we are choosing to make. The second slide, Mohammed. The slide shows the two slides of our cost basis. On the left-hand side, cost of revenue grew just 4%, well below revenue, as flat raw material cost and production efficiencies offset both our spending towards building a future-proof employee structure and depreciation on expansionary capex. That discipline is what drove our gross margin expansion. On the right-hand side, operating expenses rose 14%, a deliberate investment in growth, field force expansion, promotional activities, and pipeline R&D. Direct production cost per unit held stable at 3.1. To the next slide, EBITDA bridges year on year. EBITDA grew 8% to Saudi Riyal 346 billion at a 37% margin, essentially maintained versus last year. The message is resilience. We observed a meaningful increase in commercial investment and still held our margin in the high 30s. Net profit rose 6% to 306 million, with the modest margin move reflecting adverse foreign exchange gain and slightly lower financing income. Earning per share was Saudi Riyal 4.4. To the next slide on working capital, moment. On working capital, the cash conversion cycle improved 3% to 285 days, driven by strong inventory management. Inventory days down to 149. This was partly offset by receivable days of 182 days, reflecting regional liquidity pressure, lengthening collection cycles. The balance sheet remains strong. We carry no debt, and our cash position at the end of the first half was 266 million, up from 206 million in the first quarter. With free cash flow of 319 million, we have ample liquidity to fund our growth initiatives, including the acquisition of plant in Kaik. With that, I would like to hand over to Dr. Tariq to walk you through our business and strategy highlights. Hand over to Dr. Tariq.
Assalamu alaikum wa rahmatullahi wa barakatuh, everyone. Good morning, good afternoon. Welcome to our first half of 2026 earning call. Pleased to take you through our formidable business performance in the first 6 months of a really interesting year, as you will all agree. I mean, challenging would be an understatement. That's why I'm using interesting for everyone's imagination. Yeah, I think the key highlight for Jamjoom Pharma is that despite the turmoil, despite many of the issues around us, geopolitical and others, we continue to really deliver on commitments in a very formidable way, which is credit to my team and everyone who's involved in driving Jamjoom Pharma performance. Next slide, Mohammed, please. Yes, so that's a snapshot on our numbers for the first half. So as you can see, 9% year-on-year growth on the revenue, approaching 1 billion in the first half, 927. EBITDA is 8% staggering growth as well, 346, and our net profit stand at 6% and 306 absolute number million of Saudi Riyal, and then the free cash convert as well is like the highest of in terms of the growth pattern among the four. When you look at our gross margin, we are really at our highest at the moment at 65.2% for the last 3-4 years. This is perhaps one of the highest we are achieving. EBITDA margin continue to track in 25 and 26 over and beyond the 37% in the first half of the year, which give us confidence for the remainder of the year. And then the net profit margin stands at a solid 33%, which, as I always remind audience and investors and their colleagues, this is perhaps a performance of not exactly a branded generic organization, but it's actually a performance of a big pharma and the pharmaceutical business that will always be proud of the driving net margin better than they drive even the top line. Our earning per share is year-on-year 6% increase, and then you can see that we have managed to almost approach 100 million unit production in the first half of the year. I mean, very happy to see all numbers in green, tracking against last year in a 6 months, like the 6 months we have all been through. As I said, it's a credit to the team involved and credit to everyone in my organization. Next slide, Mohammed. Yeah, I mean, if I take you through the because some of you might recall just last 20th of June, a few weeks before this week, we just completed our third year of listing. We went exactly on the 20th of June 2023, listed our company, and since then I think our staggering performance never stopped or seemed to even slow down despite all the issues we are facing. As you can see, our revenue on the left-hand side of the slide, the top graph moved from 600 into 927 only in 3 years' time, which is basically a 50% increase, 16% CAGR to be more accurate. Our net profit stands at 21% CAGR, and interestingly, the whole of 2022, which was our first year of bringing the company back into a consistent high growth. The whole of 22 was 916 million Saudi Riyal as a revenue. So the first half of 2026 has exceeded our full year 2022, which was just 3.5 years around the corner, not far away. Very proud of such performance. And when you look at our net profit as well at 21%, but more importantly, when you look at the dividend per share, the highest CAGR among all of them, and you always hear me trying to summarize and define my mission and my leadership team mission as maximizing shareholders' value. I think that's a clear testament that the team scores very high at really our main purpose of existence and how we are driving this company. So more than doubling our earning per share from 1 to 2.2 real per share, and really staggering 30% CAGR. Next slide, Mohammed. Again, if I continue to deep dive on our performance compared to our key markets where we operate. So this slide has a mix of Jamjoom Pharma data, sales data against the market data shared by IQVIA, our main statistics company that we relate to in our key markets. As you can see here in our mix of markets representing 3 markets from the Gulf, Saudi and Egypt. You can see that in Saudi Arabia, over the last 2 years, we grew at a CAGR of 21.7 against a market of 13.2, so close to doubling the market growth. UAE market at 14.5, we at 19.4, and hence and forth for every other market, as you can see. And that doesn't happen really incidentally, and I think you will be happy to look at your company, and I assume that majority of the 150 people or so around the call are already existing investors or thinking seriously of investing. You'll be happy that this is Jamjoom Pharma is the #1 exporter out of Saudi Arabia of high quality medications to many countries around the region, Middle East, Africa, and other countries beyond the Middle East and Africa. We are the #1 exporter, and the diversity that we enjoy today, despite the slowdown of the market in Saudi Arabia, we are still able to deliver such performance. I don't think this would have been the case if we didn't have the diversity in our business, whereby we are still growing Saudi in a very strong manner, but we're growing every market outside Saudi Arabia at even a higher pace and a stronger pace. Which really have paid us dividends in a year like this, where companies that are only relying on Saudi market is struggling definitely far much more. Moving into next slide. Yeah, so that's again another deep dive into the performance recorded by IQVIA of the Saudi market. So on the left-hand side part of the graph, you see that year to date, so the last 5 months, actually not 6 months, because we didn't have June data yet, but year to date, Jan to May, the market has grown at a -1%. 5 months to 5 months last year. Jamjoom Pharma has grown at 7.5%, and we managed to solidify our position as the second rank for the first time since end of last year. As you know, last year we performed for a couple of months as #1, then we moved to #2, and since then we are a solid #2. Interestingly, #1 company, you know who? It's a company that is 90% driven by one product for weight loss, which none of us basically have something similar. But Jamjoom Pharma continued to solidify its position as the second rank, enjoying our highest market share for years at 6.5% year to date. When you look at the moving annual total, which is the last 12 months, you see that the market is growing at 7.8%. Jamjoom Pharma grown at 19.4%, so more than 2.5 times the market growth, and enjoying a 6.42% market share at definitely the #2 position as well. Interestingly, this is all happening in Saudi Arabia, where, as you can see, the market is really going far below our expectation. If you remember when I shared with you the first, the outlook for 2026, I told you that our expectation is that the market will have a little bit of a slowdown. The little we knew that this slowdown will be a negative growth, obviously, on year-to-date basis. So the market is having far much more corrections and liquidity issues than what we assumed. And not to blame the geopolitical and the war. This has started from the beginning of the year. So Jan, Feb, even before the war starts on the 28th, the Saudi Arabian market was really going on a negative front, which is, as I said, massive correction and the real liquidity issues that is contributing to this. All the data that we are receiving showing that consumer spending is down by 20%. And when you have a business like ours on consumer health, as well as primary care products that are mainly driven by consumer spend and out of pocket, then you can tell that this will be really a business that will be mostly impacted. Having said that, we still post year to date and moving annual total basis growing better than the market. Evolution index 108 and 111% in such markets. If I move to next slide with the same look, but at the UAE market, which is our biggest market in the Gulf, again, and a very strong outperforming the market in terms of growth, more than 3% the market growth on year-to-date basis. Market at 8.56, we are at 27.6, as well as on moving annual total basis, more than double the market growth. Market at 10, we are at 22.5, and a staggering 117.5 evolution index on year-to-date and 111 on moving annual total basis. Very proud of the teams behind this and the excellence and execution, which became the real flagship of Jamjoom Pharma and its team in the marketplace. Moving into next slide. Yeah, we take this into the next level, which is therapy area and markets, how our growth is being driven. So you see on the left-hand side of the graph, you are familiar with this graph now because we always share with you on quarterly basis. You look at our ophthalmology, our cardiometabolic, our dermatological portfolio, you see that really this is a performance of a company that is growing very healthy beyond the market, beyond geopolitical situation or any impact. Where we are heavily impacted, as I told you, when you look at primary care and consumer health performance. -5 on the consumer health, complemented or perhaps exacerbated by both supply issues on our side, as well as a consumer spending slowdown and market correction. Primary care, similar, very modest +2 growth year on year. But everything else we have is really growing on a very healthy manner, as you can see. So when you take this and translate it into market by market growth, revenue contribution by country, on the upper right-hand side of the slide, you see that Gulf is growing at 20%. North Africa and our other export markets, a very strong 35% growth, but obviously low base. Egypt at 8%. But then you look at Saudi Arabia, a market that, quite honestly, we cannot be too greedy because this market contributed massively to our performance and growth over the last few years. I think we can allow the market for a little bit of a slipping. Hopefully it will not be for long. That's my expectation. I'm hoping and I'm betting on this. But yeah, Saudi Arabia for the first time is our lowest market in terms of growth. If you take Iraq out, and Iraq is basically, quite honestly, that's not a true performance, but it's complemented by both us not being able to book shipments and send it on the right time. Saudi FDA prioritizing supply for Saudi Arabia before they allow us to import to key markets like Iraq. So that's delaying things as well. And clearance on the Iraq side, even when the goods reach there. If it wasn't for this, you would have seen Iraq at 15-20%, very solid growth as well, because our in-market there is going from very good to great. Once they receive the goods, it's mostly liquidated. The demand is very healthy, and I'm very optimistic about this market once things stabilize. You look at our revenue growth contributors, it's basically split almost 40-40 between strategic brands and established brands, and then the remainder is coming from our new product launches. Moving into next slide. Yeah, when you look at our future, how is Jamjoom Pharma really fueling its growth engine into the future? And I'm very pleased if you look at this slide and basically do the math between the left and right hand side, which is basically left hand side is our in-house engine mostly, which is R&D and new product development in-house, and right hand side is our business development engine and the team behind us signing deals and getting products faster and crisper from outside the in-house work. You look almost at 66 products over the coming few years, 3 to 4 years to be more exact, between business development 21 and between 20, almost 45 between the ready to launch or to send to Saudi FDA, submitted already or registered in 26 and about to be launched. So amazing performance, amazing future prospect. If you look at a company like ours, which target 6 to 10 new product launches, high quality new product launches year on year, are more than secured for the coming 4 to 5 years. If you look only at this 66 products, you add on the top the 28 products under development as well in-house, and you see how healthy this portfolio is. And we continue to even strengthen it more, but I'm very pleased with where we stand at the moment, contribution from both in-house and business development team. You add to this as well some of our initiatives that we are looking at, like starting the production of the whole Viatris portfolio in Saudi Arabia that was commissioned to us, which will start in the third quarter of this year, plus other initiatives at this front that we are looking at in some other markets as well. Next slide. So with this in mind, okay, so that's a 6 months. Now you understand what's going on, more or less how Jamjoom Pharma continue to beat expectations, beat the market growth, and perform well. But what will keep us, myself and my team, busy over the coming 6 months? But more importantly, what are the things that, if done properly, I will say that's a job well done, and we have really done what we are supposed to do for the business and the organization. First thing is no-brainer. We have to continue to sustain our outperforming market growth. We're hoping that Saudi Arabia, which is a key market that impacted us over the last few months, is going to go back into a healthy performance. But even if it doesn't, I hope it will. We need to continue to find ways to outperform. Creative, strengths and execution, everything else. And outside Saudi Arabia, obviously, we need to continue to strengthen our position and our growth as well, so that we can compensate any possible mess that happened in this market. We told you about the manufacturing opportunity that we are embarking on, and we submitted for all the needed certifications and approvals, and I'm pleased to say that we are targeting early August to finalize this deal and then integrate this manufacturing facility into our manufacturing footprint as Jamjoom Pharma. I look forward to this because this will not only contribute to expanding our abilities and reach, expanding our capacity, but it will really, given projects like what we're embarking on with Lyfera and localizing vaccines and biosimilars and biologicals with the cold facility and everything that we will enjoy in this particular facility. I think this will contribute into far beyond just expanding our capacity utilization and capacity widths. Plus, we definitely need to finalize and secure registrations of our first 1 or 2 biosimilars that we were submitted into Saudi FDA, and glad to share with you that post granted fast track approval. So I'm looking forward to getting such approvals before the end of this year, so that we are ready to kick and launch our first biosimilar from the beginning of 2027. We have, Anwar told you, and touched base on our investment into the future. We cannot be embarking on all such initiatives without really revisiting our infrastructure, revisiting the infrastructure that carried us over the last 4 years phenomenally, and see where we need to fill gaps and even prepare ourselves for the future as we expanded in business unit approach in Saudi and increasing our reach and footprint in other markets and increasing our number of sales and marketing people so that we prepare for future launches. This happened mostly in the first 3-4 months of this year. I expect to see very solid return on investment between the third and fourth quarter, inshallah, and I look forward to this. Last but not least, we embarked on getting Jamjoom Pharma into a more digital-friendly environment. I think we've done few things into this front that I'm pleased with. This year, we started as well to introduce AI into some of our functions and key departments where we see that it will help most the business. And I'm looking forward to us really capitalizing on this moving forward. Next slide, Mohammed. So from a guidance point of view, as perhaps some of you have seen in the announcement we made prior to this call, we are pleased to inform you that we are sticking to our early guidance that we shared with you regarding revenue growth, regarding EBITDA margin, capex, and capex and dividend. So basically on revenue, we still expect to get a growth this year between the 10 and 12%. Perhaps if the market continue like this or further deteriorate, maybe we will be able to target the 10%, hopefully, or we'll keep you posted during the second quarter results. I hope that we'll be able to fulfill the commitment. Our EBITDA margin, we still target the higher end of the scale that we shared, 35%. Capex we will contain it despite all the investments and everything that we shared with you at the forefront of 9%. And the dividend, as you are used to Jamjoom Pharma now, we'll keep it at 50-60% every on 6 monthly basis. With this, I will stop here and invite any questions from your side.
Thank you, management, for the very detailed and insightful presentation. Ladies and gentlemen, we will now commence with the Q&A session. You may raise your hand by pressing the hand icon on your screen to speak with the management, or alternatively, you may drop your question into the Q&A chat box. With that being said, please limit your questions to 2 at a time so we can accommodate as many participants as possible. So before we receive any question from the participant, I think there is some queries posted in the chat box from the participant, Abdullah Al-Sham. He's asking what is the main cause for Saudi market slowdown?
Yeah, thank you, Abdullah. So as I said, it will be unfair to single out one reason, Abdullah. I mean, we kind of anticipated that the market will have, I mean, there is no, I mean, modestly, I've been in this business for more than 30 years, as I always share with you. We've never seen a market consistently growing for 4 or 5 years non-stop, like we have seen over the last 3-4 years in Saudi Arabia. Fueled by many things, as you would appreciate. Not the least of it, obviously, the weight loss products that contributed at some stage a year or a couple of years ago into almost 1/3 of the total market growth because of its value and its impact as well. So that's now normalized. That's now part of the business, part of the 2-year business, and it's not growing as much. So obviously, that's a factor. Was faulty when it was introduced. Insurance, when it was more enforced, all this contributed at its early years, at the last 2 or 3 years. Again, that's normalized in the market, and even we are seeing more strict approach on this. So, for example, insurance, if you had a script on a product and you are covered by insurance at any rank or level, you will go, and if the doctor is writing 3 packs for you, they will dispense the 3 packs in 25. In 26, they will give you 1 pack, and they will tell you, okay, once you finish, you come back to us, and hence and forth. So we're seeing this. We're seeing as well correction in the marketplace where people really have built heavy stocks and to grant the highest discounts, the highest free goods, and whatever. And because of what's happening in the market and the slowdown on consumer spending, because of the liquidity pressure that is across the market, people are saying, okay, I'm not going to place my order this month. Give me another month or two because I need to be more confident that I will be able to liquidate whatever I have before I give you another order, and hence and forth. So I think it's not unusual. It's actually where it's taking us by surprise that it's heavier than we thought. So we anticipated a 6 to 8% market growth year on this year. So far, we are tracking at -1%, as I shared with you. So the correction and the impact of liquidity pressure and the consumer spending, -20%, is really a bit worrisome at the moment. I hope it doesn't sustain, but with everything else that's happening geopolitically, we don't see a huge light at the end of the tunnel. But as I said, we promise ourselves that we'll continue to find ways to outperform this, and we'll keep you posted with how this is tracking. Thank you for the question, Abdul.
Thank you, management. Our next question come from the line of Rakhtar. Rakhtar, you can unmute yourself and ask your question.
Hello, management. Thank you for your time. This is Rad Dehabi from AMB Capital. I have a couple of questions. The first question is a follow-up on what you have mentioned, Mr. Tariq, on the slowdown in the market, especially the insurance part. To my understanding, maybe the move from to generic medicine instead of the imported medicine should be positive for generic producers like Jamjoom. If you can maybe explain, maybe my understanding is wrong, or maybe the impact of that is not strong enough to offset any optimization that you have already mentioned. That's my first question. My second question is on your raw material, which was, mashallah, successfully flattish year on year, only 1% growth. I'm thinking maybe we might see pressure there moving forward if there is already increase in APIs in terms of the cost itself or the transportation cost.
Yeah.
Those are my two questions. Thank you.
Yeah, a good couple of questions. So the first one, no, you're not wrong. Actually, we should theoretically, or not we, let me correct, the branded generic high quality players should benefit better if the insurance rules are further reinforced. You're right. But that has two assumptions you cannot ignore. First, that your product is the lowest in price, and not necessarily Jamjoom Pharma products are playing in this field. And second, as I told you, sometimes it's heavily offset by the fact that when you compare, because our growth is year on year and period on period. So if the same product, even if it's dispensed from Jamjoom Pharma, the patient will be allowed to get 2 or 3 packs as per the physician recommendation to carry him for the course of the treatment. And today they only dispense 1. Then you are declining by a couple of thirds or by 1/2 of what you used to sell. So you cannot ignore these 2 factors. On the second portion, I think you're spot on. You're not wrong. What helped us in the first 6 months and the 1% modest growth on raw materials that you have seen is basically the fact that I always share with you that we plan for our strategic and key products, that we build the stocks that is beyond what others do, which is the 3 months frame or the 4 months frame. So that helped us a lot in the first 6 months of the year. Having said that, we are doing purchases in the earlier part of the year, and this is your point, for the latter part of the year and the first part of 2027, which we are going to see the impact of these increases as we move forward into the last quarter, perhaps later on the third quarter, last quarter 26 and early 27. So we expect to see this increase in costing and increase in freight and this kind of stuff that will dial into our materials cost in the latter quarter of the year or latter half of the year. So you're spot on this.
Thank you so much, sir, and thank you again, management.
Sure.
Thank you, Dr. Tariq. We will now move towards the next participant. Mr. Khalid, you can unmute yourself.
Thank you, management, and thank you, Doctor, for the call. I have just two short questions on my end. So you noted liquidity issues in the market. Could you elaborate what's the root cause of it exactly, and is it stemming from the government or the private sector? And on my second question is on the OPEX levels. Could you just elaborate more on the expansion? What exactly happened this quarter in comparison to last year and the quarter before? Thank you.
Yeah, sure. So on the first one, Khalid, I would like you actually to enlighten me more because yeah, I mean, you guys are more in the market and hearing from other companies, and I mean, quite honestly, I struggle to get a full grasp of the pressure on liquidity. Obviously, there are many investments in the marketplace. Many projects that perhaps we have never seen in the last decade or so in Saudi, mashallah, and I'm sure that's putting pressure on liquidity. But there are other factors that, quite honestly, I'm not 100% familiar with. But more importantly, I mean, so from governmental spending or from privatization, yeah, you and me can understand this. But when the consumer spending go down by 20%, this is the part that is worrisome for me. We were always happy and proud to share with you guys over the last few years that our flagship consumer health portfolio is really driving the market and leading the way in terms of its growth and in terms of its product by product leadership. And this is mostly out of pocket. This is when you are having sleepless nights and you want to get a good product, you will think of Jamjoom Pharma melatonin. This is when you need a good multivitamin, you will think of Jamjoom Pharma omega-3 or Vitalife, and hence and forth. That's not happening today because, or happening with 20% less than it used to be. So that's a bit of worrisome for me. Is that part of it a pressure of the overall liquidity issue in the market, as well as the geopolitical situation, which is everyone is now keen about fulfilling necessities rather than going into things that they felt before that it's a bit of a luxury or a bit of not exactly necessities, good for the health, but perhaps not eager to have it tomorrow. I don't know. I mean, that's the only explanation I have in mind, Khalid. But what we know for a fact is that there is definitely a decline in consumer spending, which is heavily impacted our business in consumer health and primary care products. And we're hoping that things will stabilize. It doesn't look so with all the madness that is happening geopolitically. If people come back to their senses and they stick to their peace treat or whatever or updated, then hopefully things can improve. But at the moment, really, it's a bit of a nervousness at the market side that we are witnessing.
Clear, thank you. And just following up on this before we go into the OPEX levels, could you just shed a light on the receivable profile that we have for this quarter, and moreover, the delay payments that's coming? Is it coming from the private sector or the public sector?
Is that the same person? Is that Khalid?
Yes.
So Khalid, I didn't answer your second question, OPEX. So give me a chance first to answer your second question, and then quickly I will dial into your third one. So on the OPEX front, good question. I think Anwar alluded to the fact that I mean, Jamjoom Pharma is a market leader, and we modestly take this with accountability and responsibility. So we invest while others are shying away and witnessing what's happening. But we, because of our trust and confidence in both the market as well as our ability to continue driving this market with our portfolio and creating demand. So we are really investing into our future initiatives. We cannot be, for example, embarking on launching biosimilars and getting into new lines of products without building the right teams that will drive this through. Between medical, between marketing, between market access, between medical reps or whatever we call them there. So all these investments are happening and duplicating and multiplied in other areas where we are really embarking on new businesses. Hiring people for the localization of the vaccines and biologicals, which is the project that we're embarking on along with our partner, PIF, represented by Lifera. So all this is contributing into really increasing some costs on sales and marketing over the first half of the year. Are we done doing this? Yeah, 95%. The investment has already gone. That's why I'm expecting easing up and better stuff in the second half of the year in terms of OPEX management and in terms of us as well getting a return on investment of these people that we have invested in, at least for the last quarter of the year. So yeah, we are almost done, 95%. We are left with few key hires here and there, but the organization today is where I would like it to be from key functions and key positions. You asked a question about receivables, and yeah, it's across, it's both between you and me in full fairness. So government, we are not seeing slowdown yet, but we'll see when payments are due, whether we will get it on time or not. It's more on the private sector and retail people who have promised that they will pay this month, will tell you, oh, I have liquidity issue. Wait for another month, wait for a third month. And that contribute as well some time without complicating things on your minds as investors. That contribute as well. So sometimes delaying orders, because sometimes our distributor will say, okay, you pay your overdues, then I dispense your new order. When they are not ready to pay, the distributor will be hesitant, rightly so, from dispensing new orders because they are not getting their money. So even if there is demand and people are willing to place the order, the distributor will say no. First pay me and then I will dispense, or I will give you only a fraction of the order you want. So that's all contributing into the slowdown in making the orders and satisfying the demand in the market, complemented, as I said, or exacerbated by the lower consumer spending. But yes, it's across. The receivables are impacted across.
Thank you.
Thank you. Thank you, Dr. Tariq. Our next question comes from the line of Maha. Maha, you can unmute yourself. Maha, are you able to unmute yourself? I think there might be some issues. Until then, we move to next participant, Abdulaziz. Abdulaziz, you can unmute yourself.
Am I audible?
Thank you. Okay.
Yes, Maha, you're audible.
Hi, everyone. This is Mahaf Al-Marwani from Diraya Financial. I have a couple of questions, but I will start with KSA growth. You did mention that most of the decline in the market came from change in insurance, health insurance restricting prescription in the market. And I think this one is a structural change that will sustain going forward. My question is, can you quantify the effect of that structural change on Jamjoom top line? If the restrictions didn't happen, what kind of growth would we expected, and how did it affect the market as a whole? This is my first question.
Do you want to ask the second question?
I think this is my only question. The other question was answered. Thank you.
Okay, thank you. So yeah, impact of our structure, but more importantly, I think your earlier comment a bit inaccurate, because yeah, we said that insurance is part of the reason or the stricter on scripts and what to be dispensed in terms of lowest price, as well as the dispensing more than one pack versus dispensing only one pack. I said that's one of the contributing reasons, not the only reason, but it's there. And as you said, it might sustain, obviously, until the market correct itself and the pressure on everything get eased up. Yes, that's true. Your question about our structure and the investment right there. So definitely, when we do structural change and we invest into our organization, we don't expect this to be dialing into the given year where we are doing this. Yeah, we expected perhaps to dial in the latter part of the year, but more importantly, these are investments for the future. As I said, you guys are, I think, witnessing the fact is that the number of initiatives that we announced over the last few months, I think, definitely will push us as responsible and accountable executive leadership to ensure that we really fuel the organization and prepare it in order for us to win at many fronts and hit the ground running in driving many fronts. Like, as I don't want to repeat, when we launch biosimilars, we have to be ready and we have to be at the same forefront of the competitors that we are going to compete with in this front. When we embark on localization of vaccines and biological, we need to be ready with the right people and the right expertise, and which not necessarily that we had this before, as you would appreciate. And hence and forth, when we as well move into a more specialized approach in the market of Saudi Arabia, which is our inception market, because we feel that this is more of the need of us to move into more business unit approach, more so that we can really have a more focused business momentum and business approach that requires investment as well. That is, yes, a one-off, and yes, we expect it to pay. Unfortunately, the first 6 months didn't help, but I'm still counting on seeing a payback in the latter part of the year. But these are very important and vital investments for the future, and we are very pleased that we have done it. We are very pleased to have done it where we are financially capable of doing all these investments and still presenting to you this solid data on both EBITDA and net margin and everything that perhaps many others will fail to do. So very necessary, legitimate, timely investment into our future that we're very happy that we embarked on now. Thank you for allowing me to clarify this. Other questions?
Can you just clarify one thing? Maybe I didn't ask my question clearly. My question is about the restriction on prescription refills. We spoke to also hospital, and they did mention that it caused a drop in pharma revenue for them due to that reason. Just can you quantify how much of the market drop for overall was due to that? Do you have like a number or a percentage? If you can clarify
No, I
this for
cannot,
us,
but
would be
it's,
helpful.
I think if you read the numbers I shared with you, you can see that the Saudi market is declining by 1%. So all these factors are dialing into the market decline in the first 5 months of the year. So that's not something that is impacting us per se solely or mostly, but it's impacting the whole market. This and wasfati, as I said, and the normalization of the weight loss, and so you cannot really single out one factor and you think that it's the major contributor. No, that's it's just one of the factors. We're not paying tons of attention to it, because if that's the way and that's how insurance would like to rationalize the spend, they are right to do so, and we need to set ourselves into this direction and manage our business in this direction. So But yeah, the whole market in front of you is showing -1%. That's one contributor, and the other factors are other contributors to this.
Very clear. Thank you.
Sure.
Thank you, Dr. Tariq. Our next question comes today from the line of Asmar. Asmar, you can unmute yourself.
Can I ask my question, Abdullah?
Yeah, you can ask.
This is Abdulaziz
Sorry,
Lachi from
Abdulaziz?
Sabinvest.
Okay.
Yeah. Thank you, management, for the call. Can you please split the second quarter revenue between private and public tender channels and clarify the latest updates on Wasfati?
Latest update on?
Wasfati front.
What do you mean latest update on Wasfati front? Sorry.
Is there new updates in terms of the agreements with the Wasfati program? Because we heard some changes in that matter.
Yeah. No, you're sorry, I didn't get your name.
Abdulaziz Al-Raji from Sabinvest.
Abdulaziz?
Al-Raji from Sabinvest.
Alan Abdulaziz. So yeah, I mean, yes, there are, and what you heard is right, and I think there was a significant correction last year on Wasfati because of certain malpractice and whatever. I don't want to get into because I think like us, you are receiving this news in the marketplace. But yes, that resulted into a lot of corrections and a lot of more strict approach into what to dispense, what to choose, and stuff like this. Latest update, it's business as usual for us, Wasfati. So there is no update really. We still gain business there. We still get some of our key products contribute into Wasfati, like we contribute into every single channel of the market. But as I said, Wasfati became, for the total market and for Jamjoom Pharma, who is a market leader in this market, business as usual. So we don't have like exciting news to share or even news, because it's part of the business. Khalas, dialing into our way doing our business. So that's for Wasfati. Your other part of the question, Abdulaziz, was about what? Sorry, remind me again.
The mix between private and
yes. So it's
public,
so as I shared with you always, we over the last few quarters and 2-3 years, we are basically revolving between 80-20 between private and institution. Sometimes it go up to 82, 83 in retail and 17 in institutions. Sometimes go so yeah. But if it go up, it's at 80%. If it go down, it's at 83, 84% retail, and the remainder is institution. What I can tell you is that we continue to grow in this front in the institution. But as I shared with you perhaps in a previous slide, maybe I didn't highlight it, but I'm glad your question is enabling me to highlight. We are witnessing a deceleration of growth in the institutional and tender sector by itself, not Jamjoom Pharma business, but the whole market. So the whole market last year was tracking at 16%, 16, and this year it's tracking at 10%, the institution and tender business. So we're witnessing a little bit of slowdown there. Our business is still growing, and we are still beating the market in terms of growth, but we are witnessing this a bit of a slowdown. Thank you for the question.
Thank you. I have another question.
Can you, just in the interest of time, if you can limit to one, please.
Yeah, sure. Can you give us latest updates with the Lyfera agreement, included the expected timeline, capex, financial impact?
Yeah, sure. So yeah, as we announced, so we are busy finalizing the shareholders agreement, which will be signed between the two parties over the coming few weeks. Then we expect by October time to come with an announcement about the entity, what we will call it, how it will look like, and everything related to infrastructure and management of this entity and everything else by October time. And in the meantime, the business is ongoing because NOPCO is issuing tenders on the vaccines, and the big companies are competing there along with other companies in quoting for this, and liaising between us and NOPCO and Lyfera in finalizing this. Biologicals, we expect a similar approach as well later on in the year. So yeah, I mean it's moving as per our timelines, and I think the next thing you will hear from us is once we sign the shareholders agreement within, as I said, the coming few weeks, and then the next milestone after that will be in October time when we will come to you. Perhaps we'll do it on the side of the earning call of the third quarter, or a separate announcement where we speak about the entity, the structure of the entity, and more details about how we are going to manage such entity.
Perfect. Thank you. Wishing you all the best.
Sure. Thank you very much, Dr. Aziz.
Thank you, Dr. Tariq. Our next question comes today from the line of Mr. Asmar. Asmar, you can unmute yourself and ask your questions.
Hello, Asmar Shams here from BSF Capital. Thank you for taking my question. I'd just like to ask that with the slowdown in the local market, are you seeing any increased pricing competition or discounting activity at the distributor level from other producers? And is that something that Jamjoom would consider, or would you rather avoid any discounting, even if it means slower volumetric growth? Thank you.
Yeah, good question, Osman. Thank you for. Yeah, we're seeing all kind of stuff in this market, Osman, and it's part of. I mean, we cannot just modestly enjoy market leadership, and we don't expect that we see a lot of headwinds and trends that are not necessarily going our way, but we watch and laugh, and as I did when you asked the spot on question. So we're seeing trends like Jamjoom Pharma is successful in consumer health. Apparently, that's a good. Let's get into every company would like to be in consumer health. Jamjoom Pharma is successful in ophthalmology. Let's get a portfolio of. So I mean, we're seeing all these kind of things, and it's distracting people, but it's never distracting us because we continue to drive our performance and with a formidable way without really paying tons of attention. Discounts, as you spot on said, yes, we are seeing this behavior as well. You know, when the market is not growing as good, and when certain companies become more desperate than others, then you see heavy discounting stuff in the market. People and key chains are putting pressure on you. We don't move from where we are, quite honestly, and we don't respond opportunistically because we are never desperate. We say, okay, this is our offers. This is how we treat our products. We don't too much commoditize our products. We don't like to treat it this way. If you think that there is a demand on our product, take it. If not, good luck with others. Same time, again, to your very deep thought about question of Othman, we are seeing as well trends from other markets, other people from other countries coming and thinking, okay, now that Jamjoom and some other domestic players are successful in driving this market, maybe we can come and play and compete on lower prices and whatever. Who cares about quality but lower prices and everything else, and maybe we'll gain in this front. So we're seeing all these sort of approaches, not necessarily paying attention to it, but yeah, I mean, we continue to drive our way. We continue to lead with the same way we led in the last 3-4 years, and we don't really get or allow our teams to get desperate in driving discounts or driving free goods and stuff like this, because we are in this for the long term. And quite honestly, we respect our business, we respect the quality of our products, and we would like to continue leading like this, not leading by being the highest company in offering discounts or free goods. Not a great place to be.
Understood. Thank you.
Thank you very much.
Thank you, Dr. Tariq. Next
Sure.
question comes from the line of Harsh. Harsh, you can unmute yourself.
Thank you. Hello, can you hear me? Yeah, thank you for the
Yeah.
call. So I have two quick questions. So your margins in 2Q stand at 11 quarter high today. So I just wanted to know the reason. What is the factor driving these margins, and how would we will it sustain in next 2 quarters and in the medium term? And my second question is about the KAEC facility. So I just want to understand, when are we expecting the revenue contribution, and what is the incremental impact in the total revenue in first 12 months after commencement of operations? Thank you.
Anwar, would you like to take this? Anwar? So yeah, maybe Anwar is muted or something, or we lost his connection. So your first question was about what's driving our margins, if I heard it right. Was that your first question?
Yeah, so the margin stand at 11 quarter high. So what is the reason behind resilient margins, and are they expected to be sustained in next 2 quarters, rest
Yeah.
of the year?
Yeah, so listen, I mean, if history is any predictor of the current and the future, you look at our last year, as I shared with you in some of the earlier graphs. At the same time, 6 months into 2025, we're tracking at similar EBITDA or slightly higher and similar margin. But then we closed the year, like for example, EBITDA was at 37.7. We closed the year at 35.2 in 25. Similar to net margin. So we expect the same to happen this year because of the trend we are following, and I hope that you guys are leaving it with us now, that our first half normally is a higher contributor half to the year, because it's more of the push, and then we do the pull for the rest of the year on the in-market sales. And our last quarter is the lowest in sales as well, and this will continue to be the same this year, as you would appreciate and expect as well. So we expect our margins to close the year on the same solid performance, but we don't expect it to be at the same absolute number as you would appreciate, because that's historic where we have been, and I expect this year not to be as an exception. So you can expect, as per our guidance, as I said, a higher end of the EBITDA at 35, and you can expect something close to the 29 to 30% on the net margin, as we concluded last year as well. So that's our expectation, and I think we'll stick to this.
Sorry, Dr. Tariq, I couldn't unmute, but I can
No
also
worries.
elaborate on this one.
No.
That okay, as Dr. Tariq explained, that okay, the pressure on the cost at the moment, we are managing the increase in freight cost, the increase in raw material. At the moment, we are maintaining the gross margins, but going forward, it would be very difficult seeing in the increase in material prices. So the gross margin also difficult to maintain.
What was your second part of the question? Sorry, I missed it.
But when will the KAEC facility revenue contribution start, and what is the incremental revenue impact in the first 12 months? How it would be in
Which facility?
the
The new
medium term?
facility?
The kite facility,
Yeah,
Dr. Dar.
The cake
yeah,
facility?
correct.
Cake facility. Okay.
Yeah.
Yeah. What is the question about this facility? Sorry.
So when is it expected to start contributing to revenues, and what would be the incremental impact towards the total revenue, if you could provide a sum or else a total number?
Yeah, yeah. Again, I mean, I wouldn't get into a contribution into it, because yeah, it's expected to contribute once we conclude, basically. So from Q1 in 27, we expect contribution. We expect very minor contribution in the last quarter of this year, but it's insignificant. But I mean, important to remind everyone, and I think I alluded to this during my business highlights, that this is a facility that we expected to dial in strategically into not only our existing oral dosage form that we have the facility serving at the moment, and expanding our capacity reach and size. But beyond this, I think strategically in the Lyfera project, with the ability of the cold chain there, I think we can capitalize on the use of this facility in a very meaningful way moving forward, once we start to get awarded some businesses. As well, the size of the unutilized land compared to the utilized land of what we are getting as part of this deal is phenomenal. So we have plans to expand into new areas and into new stuff that we don't have at the moment, capitalizing on the facility. So this will be over and beyond really the short-term contribution of margin, because that's not the main reason we purchased this facility. But yeah, definitely we expect it on the short term to contribute into expanding our capacity size and ability on the oral dosage form, with all the products that we are launching on oral antidiabetics, products that we are manufacturing for others, and hence and forth. But more importantly as well, contributing into new future prospects in a heavy way. Thank you for the question.
Thank you.
Thank you, Dr. Tariq
Sure.
and Mr. Anwar. I guess this marked the final question of our session to conclude our call. And on the behalf of Al Jazeera Capital, we would like to extend our sincere thanks to Jamjoom Pharma management, especially for the time and the presentation and the last 10 minutes extension in the time. With that being said, I am now handing over the floor to Mr. Mohammed bin Khalid again for any closing remarks he may have.
Thank you, Abdullah. Thank you, everyone, for joining the call. We'll see you in the next quarter, inshallah.
Assalamu alaikum all. Thank you very much. Have a great day.
Thank you, everybody.
Thank you, everyone. The meeting is now over and you may exit the call.